Hey, welcome everybody. Jared Robotsky here. Just wanted to give you all a quick update on mortgage interest rates. This is what I do. I use to predict mortgage interest rates. I use this U.S. 10-year Treasury here, and I've used this chart in multiple videos over the last several weeks, and I think it's in my mortgage where are mortgage rates going video series. So you can see it in there, but as I expected, we put in a lower high. Yeah, a lower high here. This high is lower than here. I figured we would top out right around this bottom here. And then you also had this little wick. If you can see that, you might not be able to see that. See that little wick right there? That kind of matched up with the bottom of these wicks, right? So I figured that's where we would top out. It was almost exact. But either way, this is what I use to predict interest rates. So I did not lock rates up here. I floated. This is what I do for my clients. Now, if we broke above that, I would have locked because then I would have said, okay, we're at least going to go this high or possibly even go higher, right? But the overall data, the inflation's going down, things like that. Everybody knows we're pretty much peaked out on rates. So I expected us to make a lower high. So this is kind of what's really cool lining up here. So this here is a stochastic indicator. Show you, so you can see that. See, that's crossing down to the downside. Up here means kind of like overbought. It's a little overheated, right? So it's crossing down to the downside. Then what we also have here, this BBWP, is a volatility indicator, and it's expanding off the bottom, which means this could be a volatile move coming, right? And then what did we also have here? We have bearish divergence, and that's because you made lower highs here, but a higher high on the RSI. Higher high than here. That was a higher high. This was not a higher high. You call it hidden bearish divergence, but really that's bearish divergence. So that's going to play out. And then you got Stoke crossing to the downside and could be a very volatile move. I would expect this to, at bare minimum, retest this lows. It's going to make new lows. So what I would say is this 10-year is probably going to come down somewhere around here. I think it makes at least a slightly new low. The next place I would look for probably be somewhere around here. So I think we are headed down to the lower threes. What does that mean for mortgage interest rates? That means 30-year fixed mortgage rates are headed to the fives. That's what that means. You can already get an ARM loan in the fives, adjustable rate mortgage in the fives. So this is really good news. And it also tells me that probably the bottom of the housing market is probably in. It's going to improve as rates go down. So thanks for joining me with this quick video. Just wanted to share some information that I came across as we come into this weekly close. Thanks a lot. Y'all have a great weekend.